Sean. Welcome to another episode of This Week in Crypto.
Morning, Bobby. It's another cold week in Cape Town, eh?
Yeah, I know. It's like the famous saying, winter's coming, winter's here. It's been all over the crypto markets. It's been all over regulations. Some of the things I wanted to talk about. And also just kind of, I want to chat a bit of Ethereum today as well. I was hoping there's always a lot to cover, but limited time. So let's dive straight in. I started off with regulations. I want to get your input on the latest regulations stuff that's happening, because everyone's talking about Binance and them, cutting off people being able to deposit money, and it's a crime and all of that. So from Revix's point of view, from Sean, what's the latest on the regulation front?
Yeah, so global regulators seem to be clamping down on crypto. In the UK, not in the FCA. In the UK, you have the FCA, which is the equivalent to the FSCA in South Africa. They banned Binance from operating in the UK entirely, which is a pretty big move. Yeah. In South Africa, you had a rather interesting new addition to the FAQ section on the SARB's website, which prevents you, or doesn't prevent you, it actually just discourages you, I suppose, through a criminal prosecution that could ensue, from moving cryptocurrency from a South African platform on exchange like Revix to an international platform, so to the likes of a Binance. And that was rather big news, because before it was always sort of like, well, are you moving currency offshore? So are you looking to circumvent exchange controls that we have in this country? For everyone that doesn't know, you have a 1 million rand discretionary allowance. That's the amount of money that you can move offshore in 1 calendar year. And then you have a capital allowance, which gives you a further 10 million if you apply to the government. Yes. And I mean, if you're a business, I mean, that's not really that much money, right? I mean, look, don't get me wrong, both a capital and a discretionary allowance are personal allowances. But I mean, if you're looking to move money offshore, as let's say, like, there's a lot of arb, so the arbitrage services are quite well known in South Africa. And if you're looking to move money offshore, you can get to that million pretty quickly. Yes. And you can obviously go and, do that a few times over, and all of a sudden you're close to that 11 million. So yeah, it's big news. I feel that South Africa is, trying to be progressive, but just due to these archaic structures that we have, which are, exchange controls, I'm like so sick and tired of talking about exchange controls, because it is just so antiquated, and like the entire structure just doesn't make sense. And it will never be able to prevent people moving crypto offshore, because crypto it's designed to not exist in a world of exchange controls. It's a digital asset, right? It doesn't exist in any locality or any geography. So there's a lot happening. I mean, it's not exactly all doom and gloom in crypto, but from a regulatory perspective, this is a challenge that we need to get over. It's too early to say exactly how we will respond as Revix, because naturally we will oppose this regulation, the same as any other platform in South Africa. So there may be a possibility that we'll come together and look to sort of push the regulator on changing a few things.
Do you feel like the regulations that they're trying to pull or push through is actually taking the decentralized out of decentralized? They're trying to centralize it. They're trying to keep it in South Africa. They're saying that you can buy crypto here in South Africa, but you may not move it. That's kind of centralizing it, not so?
Definitely. I mean, again, you've got a centralized regulatory structure that is made for centralized institutions. You can't apply a centralized framework to a decentralized landscape. You have to have something that's really scalable if you're looking at regulation from a blockchain perspective or from a crypto perspective. So if you're saying, well, okay, let's have exchange controls. Let's make sure that we monitor the movement of funds onshore and offshore. I mean, at the end of the day, cryptocurrency, like its primary use case for most cryptos at least, is sort of the movement of value. Now, it's meant to be moved peer-to-peer. Like that is literally in that Bitcoin white paper, right? So now you're saying, no, listen, if you move it from one exchange to another exchange and it's going across this imaginary border that we've created, then, that's an exploitation of capital and that's illegal and all the rest. I mean, that's ridiculous. Like it doesn't work like that. You're going to have to introduce some sort of a framework. And this is something we've asked the regulators to do, to say, listen, make us exchanges authorized dealers. So in South Africa, you can't move funds, that's funds rands, offshore without using an authorized dealer. So it's just a fancy financial term. And what I'm still sitting here kind of scratching my head saying, well, why not make us authorized dealers? And then we can just essentially utilize crypto instead of rands to move funds offshore. And we can report those payments to you. We can, do everything by the book.
Ripple was trying to do?
I mean, that's exactly what Ripple does in terms of international remittances and all the rest. But Yeah, the issue with this really is that cryptocurrencies haven't been declared currency in South Africa.
Mm,
So an authorized dealer is only permitted to move currency offshore. So you're falling sort of outside of that remit. So
mm,
there's all these question marks at the moment. I mean, we'll get there, but it's
mm.
just how long and when.
Yeah, because it's interesting because someone asked me the other day, like, why do you like crypto? Like, why have you invested in it? And there's normally two main answers that people talk about, and the one is obviously decentralization, and the other one is obviously when it comes to Bitcoin is the 21 million cap in terms of how much Bitcoin can create. So, it's a hedge against inflation. By trying to make it decentralized, it's one of the selling points. Centralized, why would people want to, you kind of breaking away that value that people want to invest in, right? And that goes to the next kind of thing I want to say is, or ask is, I've also got friends that are like kind of, they hear of the headline Bitcoin, but they don't really like, they want to diversify. They're kind of in their 30s. They're now, trying to understand investments opportunities, and they hear of Bitcoin. What is your advice to them to say about diversifying their portfolio at this stage in this current climate?
Yeah, I mean, it's the same as every other asset class. You can't go and just invest in one asset. I mean, that's gambling. So if you went to the stock market and you just bought, let's say, Woolies shares, I
Mm,
mean, great, but that's not really investing. That's more kind of just taking a punt on Woolies.
yeah.
If when you get into the property space and you actually want to build a property portfolio, you're probably not going to go buy every property in the same building, right? Because there's a lot
Mm,
of risk when you have just a single building. So what you'd like to do is to diversify. Now, this is the most old, boring financial advice, but it is really useful, which is just
mm,
to look to diversify a portfolio.
mm,
So get a few different assets in different areas, and then within the same area, also look to get a few different types of assets. So as an example, Woolworths is very driven by inflation of food prices, consumer discretionary spending in South Africa. That's a completely different set of factors to, let's say, Naspers,
mm,
which
mm,
has
mm.
Tencent and all the rest
Yeah.
as their primary investment. And that then looks at sort of digital adoption, the growth of gaming revenues across the world. And I mean, those are two fantastic shares. They complement
Mm,
each other. One's a rand head share, being Naspers. Woolies is a lot more of a local share. Now, just in the same sense, in the crypto market, you've got Bitcoin, which is
mm-hmm.
playing this narrative of digital gold and kind
The
of
OG.
difficult to move money and expensive to move money. Yeah, a store of value play. That's what you could really call it. And
Mm,
then you've got the likes of Ethereum, Cardano. I mean, you mentioned Ripple,
mm,
XRP. Those cryptocurrencies are all doing something different, and they have slightly different factors that impact it. Now, don't get me wrong, the crypto market is pretty correlated. So when
mm.
Bitcoin goes up, the rest of the
Yeah.
market generally goes up. But that is changing, and that has been breaking down quite substantially over time. So if you
Mm,
look at the likes of XRP, I mean, XRP is built for financial institutions to move large amounts of money from one jurisdiction or from one country to another country. That's a very
mm.
different use case to Bitcoin. Bitcoin is not good at doing that. It's
Yeah.
very expensive to send,
Mm,
well, relatively to XRP, it's expensive. If you're looking at, let's say, Ethereum as an example, I mean, Ethereum is going through this upgrade,
yes.
and there's all these different factors that could impact Ethereum. So you wouldn't want to just go and buy Ethereum. That's why,
Mm,
at Revix, we offer a diversified cryptocurrency basket. And I truly believe, and this was the selling point when we first launched Revix and we raised our initial seed capital, is to say, listen, treat this as any other asset class. Like if you want to gamble, like utilize some portion of your funds to do that and go trade on exchanges, have fun. But just remember that that's more entertainment than investing. Investing, unfortunately, is a little bit more boring than trading. You don't get that
yeah.
kick, and you probably shouldn't be getting that kick or staying awake at night worrying about an investment.
Yeah, exactly. We've had that discussion in the previous episode, and it's so true though. The more I think about it, but it's great how you've spoken about that because if we want to talk about the price action over the last 7 days, again, the price of Bitcoin has kind of set. It's fluctuated and it's gone up and down in the last 7 days, but it is almost exactly where it is. They're talking about it being an accumulation period, where all the stronger hands are just accumulating more at these price ranges. But Ethereum seems to have had a bit of a different feel to it. It seems to be slowly climbing. So I wanted to touch on Ethereum a little bit just to give people more understanding. Because I'll be honest, like I understand proof of work. What is it's proof of state, right? Proof of stake for Ethereum. Do you want to just explain that and why is the effect? I mean, the effect of the price seems to be a little bit more bullish at the moment. Like it doesn't seem to be, as you said, not as correlated as it used to be.
Yeah, definitely. So let's paint the broader picture here. So Ethereum is going to Ethereum version 2. That's this new upgrade that's taking place. Now, cryptocurrencies essentially are software. So that upgrade is just like going from 95 to Vista to where are we today? What are we even doing? I honestly don't even know what Windows operating system we are now.
I
Like
think they
10.
said about 11 the other day, but I heard once that 10 was going to be the cap, and then it was just going to be, online
Yeah,
updates.
We're 10 Pro, wherever we are now. I don't know if Mac goes through the same sort of flow. I'm more of a Windows guy,
Okay.
but it's very much like that. And if you're looking at Ethereum, there's a whole host of different developers around the world looking to upgrade Ethereum to be more scalable. So, how can you process more transactions every second? If you ever want to compete with the likes of Visa and MasterCard, looking solely at a payments perspective, I mean, you've got to increase the transaction throughput quite substantially. If you're wanting to run all these decentralized finance apps, we spoke about that in a prior podcast as well. There's so much, that still needs to be done on the Ethereum blockchain from a transactional processing perspective.
Mm-hmm.
The other side of this is the environmental impact that cryptocurrency has been known to have. So, while there is an argument to be made that Bitcoin utilizes renewable energy, I mean, there is still a large amount of non-renewables, so coal-powered mining taking place. That's a bit of a problem. I mean, not many companies want to go out there and acquire Bitcoin to say, look, listen, even if there's a 1% chance that they're going to be labeled as not being supportive of the environment. I mean, no company can be known as not being supportive of environmental improvement. So that's, I guess, a big selling point of this upgrade as well. And then the last thing is the security. At the end of the day, you need to make sure that a cryptocurrency is secure. The moment you have a 51% attack, where essentially somebody's able to garner more than 51% of the computing power of the network, I'm going to call it computing power, and you're able to then manipulate or have fraudulent transactions permitted, that's a big issue, right? And you don't exactly recover from that. Ethereum Classic had that happen last year. So anyway, those are the three areas that people are that the network's looking to sort of focus on and improve with Ethereum 2.0. The price action, though, is naturally being driven by this idea of proof of stake. And you asked about what exactly proof of stake is. So with proof of work, which is the consensus algorithm around Bitcoin, you utilize computing power to solve mathematical puzzles, to say, listen, one block can get connected to another block. One block includes a variety of transactions. We connect that past set of transactions with another set of transactions. Now, proof of stake is very similar. The difference being that you don't use computing power to solve these really complicated mathematical problems. Instead, you rather take some of your Ethereum and you stake it on the network. So you say, listen, I'm putting my money where my mouth is. If a transaction is processed and this transaction is fraudulent and it's found to be fraudulent by other network participants, you get to take my staked Ethereum. So I get penalized because of the amount of Ethereum that I'm essentially putting on the table and I'm staking. And that just changes the dynamic entirely. All of a sudden, you don't have to use computers all over the world using tremendous amounts of electricity. You just have people essentially holding this network's cryptocurrency, betting on the network or betting on transactions that have actually been accurate and non-fraudulent. So that's the idea now, what's going through Ethereum. So Ethereum is now going through this upgrade, and there's all the questions around whether or not this will actually occur within the next year or two. Ethereum is pretty well known. The entire community is well known at being rather slow with going through these upgrades and upgrades. Yes. I mean, Vitalik mentioned earlier this year that, he didn't expect it would take this long. And that was back in February, I think. So, I mean, we're sitting here now in July. You've got, the rest of the year where you probably won't see much else happen in the Ethereum space. But what is happening in the background, and this is contributing to the price increase, is that you've had JP Morgan, which is definitely not the bank that, you would think is pro crypto.
Yeah.
They've come out and they're saying that the idea around staking is a huge opportunity. Why? Because there's passive income opportunities now to own cryptocurrencies. You as an owner of the network now all of a sudden can earn a passive yield of between 1.5% all the way up to 20% currently. Sure. If you now stake early on in the Ethereum network. So that's a big opportunity. And that's where you're sort of seeing all these other banks, Nomura has come out, Bank of America has come out, and they're all saying, well, hell, listen, like Bitcoin was the talk of 2020. And now maybe 2021, this is going to be Ethereum going into 2022. So now that's where you're sort of seeing this buying pressure come in. Again, there's a lot of questions, right? I mean, this upgrade is far from complete. There's going to be probably some good news and bad news. So I would, again, diversify, but, why not have some stake in the game, to use the staking term there.
Yeah, that's a good one. No, it's interesting. I mean, those are serious yields. If you compare, if you're living in America and the Fed is only going to give you, I think it's what, 0.2% yield on anything that you've got saved. I mean, let's think about it.
Yeah, I think
Yeah.
that's something else just to note maybe for a South African listener. So
Yeah.
we always talk about us having really high interest rates, right? So like
Mm.
we able to put money into the bank. Let's say you get between 6 or 7%. Prime is currently 7%. So let's maybe you say you can even get a little bit more than prime. What we're forgetting about is our inflation rate in South Africa is 4.5 to 5%, and it
Yes.
probably will tick up a little bit higher.
Yeah.
So now all of a sudden you're sitting there with 2.5 to 3% real yield.
Yeah,
And then you're
exactly.
saying, well, okay, there's this currency depreciation that happens year on year. Why? Because our inflation rate, and this is an inflation differential, I'm not going into like a financial sort of discussion around this, but you have a structural depreciation of the rand by
Yes.
our inflation rate over the long term. So
Yeah.
that means that you're looking at a 4% depreciation of the rand. So technically you've actually got negative yields in South Africa as well.
Yeah.
So all of a sudden this real dollar-based return does seem to make a bit more sense than perhaps earning the interest rate at your savings account.
Yeah, you've opened a can of worms. Yeah, it's a massive thing. I mean, like the petrol price is just skyrocketing. It's going to bring that inflation in, and I don't think a lot of people understand these dynamics that you've just explained. And clearly, we could carry on talking. Just one last thing that I wanted to cover today is we've spoken about an individual and what they should be looking out for. What about a business? We've spoken about Woolies. What should Woolies be looking out for in this current environment in terms of, you know, where the space is going, and should they be paying attention? How are they going to take advantage of what's happening?
I mean, if they're going to be a more progressive company, Woolworths would probably not be a more progressive company in the sense, you know, buying cryptocurrencies just as you would potentially buy gold in your treasury makes sense. And maybe in the future, you know, if you've got this long-term price trajectory that is up and to the right, I mean, that's what not all, but most of the more reputable cryptocurrency price trajectories look like. Then you're saying, well, okay, well, so maybe you do own a little bit of this. And if you invest as a company into an external fund, let's just say some of your treasury goes into a fund, perhaps that fund has an obligation or a responsibility to their investors to actually get some alternative exposure to crypto. So I think that's, again, just bringing a lot more money into the space. It's going to happen slowly, but it's happening. I don't think many companies are going to go out over the near term because of the recent pullback in the market. I mean, again, it's one of these things when the market's moving up, you know, people want to get behind it. They want to have a headline grabbing sort of, you know, announcement. When the market pulls back like this, it's just the risk versus reward for company CEOs isn't there, right? Like, why would you go and allocate some money to Bitcoin and look like an absolute idiot if the market then pulls back? And it's so funny, there has been company CEOs, pretty big, well-known entities in both the UK, EU, and actually the US as well, that have come out to actually acquire Bitcoin. They've announced it to the market, and you've got crickets. You've got no one talking about this, right? Which is like the polar opposite of what they wanted to do. Like they're going, well, the PR value of XYZ is there, but you know, no one talks about it, which is also just an interesting sort of perspective.
Yeah, so interesting. Okay, so you're talking about it from a value, you're putting it on their balance sheets and stuff like that. I'm also very curious to talk about like how people can actually, you know, a use case, being able to buy something with crypto. We're giving Woolworths a lot of airtime today, but being able to go to Woolworths and being able to, you know, buy something. Yeah, Sean, our time is run. You wanted to say something there?
No, well, I think it won't be Woolies that does that, right? So just like when you travel to South Africa, and I know that we're out of time, so I'll mention this really quickly. But you know, when you travel, let's say as an international to South Africa, or you travel to the UK, you use your Visa or MasterCard and you convert your currency to whatever the local currency is when you make a purchase. It's going to be exactly the same with crypto. There's cards out there that offer this. We're actually working with a partner to offer something similar in the next few years. Cool. I mean, it's happening. It's again, it's just a process, and it's just making sure that the whole system is robust and secure. So we'll get there. It's just, guess when as well.
Yeah, man, we could talk for ages. Again, thank you so much for joining, and I look forward to next week. We can pick up the pieces. There's so much more to cover.
Fantastic. Thanks, Bobby. Cool. I appreciate that.
Cheers, Sean. Cool.